Gentlemen, and my co-panelists here. Uh, it's incredible. Before just coming to this conference, I was just counting, uh, the number of events that at least I personally would have been a part of, or been a part of a panel on these events, really covering investment opportunities in this sector. And over the last 12 months, whatever limited count I could get right, there were at least 12 fairly well-known events that have taken place. And it's indeed interesting to see the kind of at least the buzz that's there. Now, how much of that is really reflected in actual investment activity, and uh, how much is really reality on the ground is a slightly different thing. But again, uh, what's very important is, and especially if you rewind the whole situation to 2009, when we were literally on a standstill situation in the economy, and from there, the last 2 years specifically, I think this is one sector which has shown phenomenal resilience in 2009 and a significant rebound from there onwards till date. So why is this buzz, and what's really happening on the ground? As I look at it, I think somewhere it's clearly linked to the fact that as an economy we have demonstrated very high resilience, and very importantly, when you really split it in terms of trade, what we've clearly noticed is that while pre-2008, the EXIM trade, which was really the darling of a lot of logistics service providers or infrastructure companies because it was profitable business to be in. But I think it's really the prominence and importance of domestic trade, which, as per my estimates, is easily 20 times the volumes of EXIM trade, has really clearly demonstrated the power of domestic trade, which we as the industry cannot ignore. And therefore, we've seen, if 2009 was any indication to go by, those businesses which actually had very well grounded service orientation to domestic trade demonstrated much higher resilience. And now as volumes have picked up, we are seeing businesses who've actually got a sort of a balanced model between domestic and EXIM are really seeing phenomenal returns for whatever they've invested all this while. Second, I think this whole infrastructure investment thing has been talked a lot. I personally do not really glamourize it beyond a point, because we all know, if you look at our 11th five-year plan, where we had close to $125 billion earmarked for transport infrastructure, if you really see what we achieved, and especially if you split it across ports, roads, airports, I think our achievement has been far below what it should have been. And ladies and gentlemen, the the good news or the bad news, whichever way you look at it, and it so happened that I was in consultation with Planning Commission a few weeks ago. 12th five-year plan has increased that outlay from $125 billion to $250 billion. Now, our achievement of even that $125 billion was less than 10%. If you really see in terms of what capacity really came up. But directionally, government is very clear and committed to making sure that the capacity, which really in any way funnels this entire sector that we represent here, comes upstream. And when you look at all our gate capacity, whether you look at ports, whether you look at roads, whether you look at airports, today is severely under pressure. All our major ports are operating anywhere from 90% to 150% utilization levels. If you look at our roads, the average load that our roads are carrying today are somewhere in the region of 150%. Right? If you look at railways, despite being the fourth largest rail network in the world, our rail network on the specific routes is congested to an extent of 250%. 30% of rail network today contributes to 70% of freight. Now, it has significant opportunity, because obviously this capacity has to be built. But what it does is that it actually creates significant amount of downstream opportunity for all of us here, because this has been a significant challenge. Third, and one of my co-panelists was really asking me whether I'm going to talk about it, and as shameless as I could get, I would again talk about it. I think we've made some progress on some fiscal reforms in this country. At least there have been announcements. And I do believe one of the significant such policy that is being talked about a lot is really GST. And I'm extremely ashamed to always, take a guess on when that's going to come up. I therefore will not hazard a guess again. But what I definitely want to say is that the impact it's going to have, very clearly, in my view, is going to be transformational, because for the very first time in this country, the supply chain configuration post-GST can actually be determined on the basis of true logistics optimization related drivers rather than fiscal, I would say jugglery or tax jugglery, as we would call it. And it has had significant impact on the way people are thinking about building storage capacity in this country. My team members did some maths, and they've suggested to me that if GST comes on board, we would need close to 150 million square feet of fresh warehousing capacity structured in a very different way, like the way we've seen it in the US or Europe, hub and spoke. We may actually not need the number of warehouses we today have, and that can actually be reduced to quite significant. And that capacity has to be actually built. Significant amount of investment is required. And today, the who's and who of global large logistics park and warehouse developers and investors are eyeing that opportunity. Number fourth, if I were to also really acknowledge and admit, I think last 10 years, and some of my co-panelists, I'm sure they'll reflect on it basis their experience as well, I think when you see the demand side sophistication has jumped leaps and bounds. Today, when you look at a customer of, let's say, we were just talking about example from an IT or a telecom company, the requirements they have, the complexity of their supply chain that they manage today is far more than what it was some time back. And in many of these cases, therefore, their ability and their need to have a sophisticated supply chain provider is far higher than what it was 10 years back. I was again, in a meeting with a company that manages supply chain for Toyota in India, and you'll be surprised, for most of their vehicles, the inventory for critical components is not more than 1 hour. Forget about days. So they do not stock any inventory of critical components for more than 1 hour. And that's the kind of a model this company has built, obviously through technology collaboration that they had with Toyota's supply chain company globally. And I believe this is a great sign, because one of the challenges that a lot of international companies and also Indian companies who are trying to build capabilities has been that is the Indian market, is the Indian consumer ready to actually absorb these sophisticated services, and are they willing to pay? And in most cases, my response to them is, if you have a proposition, and in some way that proposition can be demonstrated, there are customers today who are willing to pay that. Now, when we put all of this together, what does it mean? It means two things. One, we will definitely see a lot of transport infrastructure capacity creation in this country. Therefore, if I look at the amount of capacity that is going to come up on ports, on roads, on airports, and on rail, I think this augurs extremely well for the downstream industry. And on the other hand, we are going to see definitely a significant growth on the services side, because we have not even touched the tip of the iceberg as far as logistics services is concerned. So what does it mean for investors? What does it mean for entrepreneurs who have actually built a business, now trying to actually take advantage of these opportunities and grow? Well, it really means that this is one sector which is going to see a significant level of M&A activity. And if my own personal experience is anything to go by, I've seen over the last 2 years, this sector has indeed attracted significant amount of M&A activity. And I'm glad to, in fact, these data sometimes could be misleading because you don't know what numbers you're looking at, but somebody actually cooked this data for me. It clearly suggests that if I look at the last couple of years, almost 60% of M&A activity in some way has been financial sponsor-related M&A activity, largely done by private equity funds. Now, again, a significant quantum of that might have gone into, let's say, large-scale port investments or some platform portfolio-related investments on road assets. But you'll be glad to know that there are a lot of investments that have taken place on pure-play logistics services, ranging from 3PL, temperature-controlled models, some niche models, reverse logistics, to name a few. And these are great signs, because the kind of models you hear today are not, I'm a 9-ton FTL-based 600 crore company, raise private equity. No. The kind of companies who've been able to raise these funds are actually medium size, niche models, high margin, great growth potential. And we will see a lot more of this going forward, and I'm sure my co-panelists are going to talk about it through their own personal experiences. Is it that easy? Clearly no. And all of us who've somewhere been involved in these situations can easily say that basis our own experience. What are the challenges? First of all, when you see from an M&A perspective, I look at it again both from a private equity and some of the strategic players, especially global strategics. The biggest problem they have is that the market is too fragmented. The scale of companies that you look at is really below the radar. And how do you find companies of a certain size really to justify an investment? And when you find a company of that sort, quite often those companies are, from a transaction perspective, quite severely bid for. They are really auctioned. And pricing expectations in many of these cases, there's a bit of a disconnect around what kind of a premium these assets should command, given the growth trajectory many of these companies have. There are issues from the point of view of deal execution. There are governance issues. There are cash handling matters, typically very, very common to logistics companies in India. It's always hard to actually convince promoter to sort of let go of certain control and get an outsider to be his partner. Not something unique to logistics alone, but when you couple it with some of the governance matters that are specific, unique to the way this industry typically functions, right? Facilitation on the ground, which is, again, I can't talk about it through this forum, but it's a reality, sometimes could become a challenge. Having said that, and with that, I'll really close my remarks on this. The prospects going forward, and clearly as we see this industry evolving, my view, financial sponsors and operators or entrepreneurs, promoters, will definitely need a lot of support from each other, because this is one industry which is going to seek a lot of financial resources in the times to come by just to catch up with the pace of growth. And I can also clearly say that even the financial sponsors will find this as an interesting asset class, given the kind of growth trajectory this business or this industry can take to generate, in my view, maybe top-of-the-line returns that some of the other industries in the last decade saw. And I won't be surprised if this is one of those industries in the next 10 years where we'll all look back saying, look, this was one of those asset classes that we backed at this time in the growth trajectory of India. And there'll be healthy returns for everyone to talk about. With that, let me just pass on the mic to my colleague Anand, and